G'day again. Welcome to the closing bell, first one of 2024. Hope you had a great break. I'm sure you've been missing me massively, and so happy that I'm back or not. And today I'm going to have a look at a few of these main markets that have been really flying around ahead of Trump. I'm not going to stick my neck out too far today because I think we're on the verge of, what could be really sharp moves from here. Um, but I think you'd be pretty foolish to think that you know exactly what's coming next. Really, with a new president coming into the US, that's a whole new set of rules that the market has to play by. We don't know what the rules really are, and we don't know how the market's really going to react. What we do know is that there's some elephants running at the moment in the bond markets. There is money on the move. Um, uh, you know that the long bonds, sort of 10-year bonds, really everywhere, UK, Japan, US, Australia, those yields are rising. And that is really a bit of a conundrum for us, isn't it? Compared to what everyone was thinking 6 months ago. Interest rate cycle had peaked, rates were coming down, happy days, all the banks were rallying, property rallying, uh, uh, happy days are here again, let's party. And now we're in a situation with this yield curve bear steepening all of a sudden. So I'm sure you've read the articles, Trump coming out and cutting taxes. Does that make deficits still bad there, even though they're talking about cutting costs, cutting their spending with the Department of Government Efficiency and Musk? But are they going to have to issue heaps and heaps of bonds to keep everything ticking over with the size of the spending that's going on in the US? So, those bonds, we talked about the bond market vigilantes from decades ago. They really did rule the roost and force governments in certain directions. We haven't seen that for a long time, and perhaps we're on the verge of that sort of thing happening. But also, it may just be a bit of, panic and moves happening before Trump gets in, thinking about all these tariffs, and all of a sudden he comes out and does a few deals, and things aren't as catastrophic as everyone thought. And everything settles down, and all of a sudden the bond markets start rallying, and rates can fall. We saw the inflation in the US, even though they were still pretty high. People happy with the core inflation figures and stocks rallying. So also Trump is this business friendly person, isn't he? So he's um, deregulating financial markets, getting business people involved in the decision making in the government to help things really move forward. So you're sort of getting this feeling of what could be a real boom getting underway, potentially in growth in the US. So that is seeing things like, well, oil took off back based on those Russian sanctions, but is that also signs of ideas of growth really picking up as a result of Trump's policies? And I'll show you copper in a second, also really picking up, looking pretty interesting to me. So we've got a lot on our plate as we enter 2025, and I'm just open and to listening to what the market tells us rather than telling you what's coming next. But I'll show you some, lines in the sand, what to look for, when to change tack, and that sort of thing. So let's jump to a few charts just to get a sense of what this first few months of the year could hold in store for us. So I'm going to kick off with the US 10-year bond yield, of course. Um, uh, Dull for some, but really the crux of everything's just so important for what's coming next for the markets, especially because they are moving so sharply at the moment. So, just a quick overview, 10-year bond yields in 2020 down at 0.5%. Crazy, just completely insane that it got down there. So we've had a reaction, inflation taking off, and rates gone from, near 0 to 5%, and everything sort of as expected. Rates started to drop. We saw those 10-year bond yields really fall. from 4.8% down to 3.6. So all well and good. You may remember me chatting about it, saying, look, the long-term trend was close to turning down, and we could expect things to do something similar to this, a new cycle of lowering rates. How far they go, I didn't expect them to fall that far, but everyone was sort of that view. That's the world we were in. And, all of a sudden, that wasn't the case. Trump's chance of getting in sort of going up, and 10-year bonds turned up. We saw that monthly buy pivot there in the yields. I noted that for you and said, look, they could head higher if they do break out above this 4.75 to 5% region. That's when I was like, wow, watch out. So it really has gotten to a point of saying, wow, you've got to watch out here because uh, that trend is well and truly intact in those 10-year bonds. It's still up. If we're just looking at this, I'm just looking at those waves, the structure of those waves, you can see back to the buy zone. If I'm just looking at this wave, there's the buy zone of that wave where I expect to see if the trend is going to continue up, support, and it has. So, are we on the verge of the next wave higher in this trend, which would be pretty amazing. So I'm open to that because technically everything is still pointing in that direction right now. But if I just bring it up nice and close for you, this is where I'm saying, I don't want to be sticking the neck out too far. I'd rather be looking at lines in the sand right now, because if I'm just looking at that wave, and you should understand how I calculate these things. We've got the point of control, the midpoint of that wave. That's the sort of the gravitational point around which those prices or yields, in this case, are oscillating. And we've got the sort of buy and sell zones of that, where we're saying, well, this is an area where there's a heightened risk within that range that you could see reversals. So where it reverses and comes back to test that midpoint again. So got close to it there, back to the midpoint, up to in the sell zone, back to the midpoint, down into the buy zone, back to the midpoint again. And so here we are up into that sell zone area again. So it is up in an area where it could just fall straight back over and go back to the midpoint around that 4% region. So, that is still on the cards. It really does need to sort of break out above this 5% to look like that continuation. So we could still have a bit of work to do. And look, if it does go back to that midpoint, it can still bounce off there and take off like a rocket. If it wants to, that could be just a month or two. So really, from here, I'd be saying if we see those US 10-year bond yields sort of really trading below 4%, so really cracking beneath that point of control, then then you're saying, okay, well this may be sort of a major high. We could be on the edge of things really tipping down, and those bonds would be a great buy because it's there's the high, and it's sort of starting to trend down. And okay, it had a little false break there, but it could still be just at early stages of that downtrend in yields. So it still is a possibility there. And if we do see something like a sell zone, a sell pivot, sorry, where things look like they're turning back down again, then okay, I could maybe start getting a bit more bullish. But right now, you're sort of saying, well, everything at the moment is still pointing up. So there is resistance here, but if it yields go down to 4.3 and then all of a sudden, bang, crack up through 4.75 and then up through 5, like above there, like, wow, watch out. And just think of this, if those yields really do rise, and you've also got that US dollar flying higher. So you should remember, I said, when the US dollar broke out around Christmas above the point of control. So here we've got 21 to 23. There's a big rally in the US dollar. There's your correction. So there's your point of control through there. And since then, we've seen, work done, point of control down to the buy zone, point of control, buy zone, and it broke out through that point of control. And I said, look, it should really head up into this 110 to 113, 112, or what is it, 111 region. And, it's really nearly got there. So that's all still looking good as long as it's holding above that point of control. It probably is going to head up into that region. And who knows, possibly, carry on because there is a big, strong rally beneath this thing. So, it really could do something that the market doesn't expect. And if it does, imagine how you're feeling if you're an emerging market and you've borrowed in US dollars and the US dollar is flying higher and the interest rates are flying higher. What happens when you need to roll over next? Um, so there'd be a lot of nervous people out there in emerging markets. We've also got, the Japanese yen and the US, all these rates flying higher. Here's Japanese 10 years also flying higher, um, now up at 1.2%. When does the government start to worry with the amount of debt they've got if it continues to fly higher? Um, and we've got all of those carry trades on in Japan, of course, and the US yen at the moment really helping those. So that all can be fine, but that yen getting to the point, those highs that it reached, the US yen, or the collapse in the yen and the strength in the US dollar when there was intervention from Japan. So what happens if that US yen really cracks out above there and the Japanese yen really starts collapsing? There's all these things that can unfold as a result of these really big picture flows that are going on. The UK bonds getting hammered. It's just one of those things that can all of a sudden spark something negative down the track. Possibly in emerging markets, there could be some sort of a dollar liquidity crisis or something like that. They're the sort of situations that can unfold as the currency, the US dollar, really takes off. So, I mean, does Trump really want the US dollar to be massively strong? The more tariffs he does on China, the weaker the yuan gets and the stronger the US dollar gets. Does he really want that, or to help those deficits? Does he want the US dollar actually a bit weaker? So you've got to be prepared for anything at the moment. A continuation of that US dollar breaking out and doing something silly, but then a deal made and a quick reversal. You see, the moves that happened. This is back in 2001 to 2003. The reversals that happen can be really sharp. So it's a matter of allowing those trends to continue and backing them for the moment, but being, really aware that things can reverse pretty quickly. So that Aussie dollar as well, still looking weak. I was saying to you, it's going to keep tumbling, and to watch out what happens below those lows. This is the very long-term one, just to give you a sense of the very long-term downtrend in that Aussie dollar. And so here it is here. I've been saying since about 64.5 cents. I said, about, could be 6 months to get to 60 cents. It's only been a couple so far. And it's on pretty major support. It hasn't seen these levels since 2022. So you can just imagine all of those people who have been buying in here. I guarantee you there's plenty of stoppies below here. So a bit more of a continuation, things still looking pretty negative. We could see another sharp leg down. That doesn't mean it's not going to then turn back up sharply, and that could be fabulous buying for the Aussie dollar down there. But it's just for the moment looking still a bit dangerous. And even if we saw a bit of a spike here in the short term, I'd still be a seller up around 64 cents, expecting another leg down. I'd really need to see uh, some sort of reversal um, in the big picture on a monthly before I'd get too excited about that Aussie dollar. Now, just some bullish signs out there from a growth perspective, with oil prices really taking off recently. Um, I think it's still early days. I'm not really ready to start loading up on the oil stocks just yet. With Trump's drill, baby, drill, and rates sort of doing what they're doing, does that cause a bit of a slowdown? And just from a technical perspective, this being Brent crude, there's that massive run from 2020 to 2022, and just having a look at that, you can see again based on that massive run from a few years ago. There's your point of control, and it's just been struggling along that point of control, but holding above. So the fact that it is holding sort of above that point of control is quite bullish. But below those lows, watch out. So it is sort of set up to still disappoint, I think, and the long-term trend is still down. So the only bullish thing for me would be that it's had a retest of this major low and is now turning up potential of a monthly buy pivot this month. So for the gutsy and people who really believe the story, you'd have a very nice setup there, just saying, I'm getting on, and if it fails, so if it turns down rapidly, especially breaks those lows, turns down into a monthly sell pivot or whatever, is like, wow, watch out, get out. So very quickly that the point there is very quickly if you're wrong. So once you get that signal, you'd be like, right, well, I know very quickly if I'm wrong. And if we're about to see the upside again, there's my upside. So your risk reward, so your reward to your risk is pretty good. So oil's definitely on the radar, but not quite there yet. But just interesting that the buying is coming in. Also, from the point of view of copper, just quickly to finish off, I've said for a while, copper's looking interesting. Look, it's been coming off the boil. We know the China problems. Trump getting in and kneecapping them has been hurting commodities for sure. But really, copper of all is still very strong. Here's a rally from a few years ago. Most commodities are not trading up near the highs. Got the initial correction. We've had another retest of that high. And really, it is trading in an uptrend as far as that goes. You can see there, still looking like it's going to be retesting those highs at some point. The long-term trend is up. We've got the monthly buy pivot there, and we're just seeing retests of sort of major moving averages and turning back up again. So all looking pretty solid on that copper front. And yeah, I'd say that's saying, is growth actually picking up? We saw the employment figures coming through, et cetera, inflation coming off the boil. Perhaps Trump really is going to inspire a big, strong uplift in growth this year. It's a possibility. So that's where I'm leaving it today. I've given you a bit of an outline. I haven't stuck my neck out too far, but giving you a sense that we could be on the cusp of some pretty big moves, and especially watching those bonds will be interesting going forward. All right, well, I'll look forward to working with you this year, and I'll chat to you next week.